And also joining us from out west is Jason Calacanis, who is an investor with Inside.com. Jason, it's always great to see you. We have a lot going on in the markets today. Dow, S&P, NASDAQ, all posting their 2016 intraday highs today. Dow holding pretty steady above 18,000. Russell 2000 and the Dow transports are out of correction territory. But let's start with Netflix today, Jason. Shares have been hit hard after the company gave weaker than expected subscriber guidance for the coming quarters. Just 2 million subscriber additions rather than the 3.5 million that investors were expecting. Yesterday, also, you'll remember Amazon said it would offer Prime Video as a standalone service. That's something Reed Hastings talked about last night on the call, and I believe we have those comments from Reed Hastings here. Take a listen.
Hulu is doing some great work. Amazon is, HBO, Showtime. There are so many competitors, and everyone is working hard to build the best content. And so, you know, we're seeing growth in the overall internet TV market. Of course, that's displacing linear TV. And it's natural that everybody's coming in as they realize that the future is internet TV.
Jason, he seems to be saying what's good for our competition is also good for us. Do you buy it?
Yeah, absolutely. I think that this is a company that has defined a new category, which is going to be the first company to become a unicorn, not by having $1 billion valuation, which obviously they've done for some time, but by having 1 billion paid subscribers. I think that they're 8% of the way there. If they add 25 million subscribers a year and they go on an international march and do what they did here in this country, in Europe, in Asia, in South America, which I think they're capable of doing, you know, we could be looking at what Google did to advertising, what Facebook did in advertising, what Google did with Android. We could see that happening to the entertainment business, where they have hundreds of millions of paid subscribers. Now, of course, you know, they changed their guidance a little bit, and it's the entertainment business, so it's going to be hit-driven. They've had a bunch of hits.
Sure.
But for $8, $9, $10 a month, this is the greatest, you know, value in entertainment. And with millennials watching TV on their phones and iPads and just totally giving up on cable subscriptions and DirecTV, this is a huge company.
Jason,
and so I would take a
they
10-year view of this.
They created this market. I mean, they were the first movers here. It's no doubt about that. But it's now a company whose stock is down 11% today, trading at 100 times next year's earnings, saying it will be cash flow negative, burning $1 billion a year for the next 2 years, and spending about $6 billion on content. What do you do with that if you're an investor?
Yeah, I mean, listen, you're getting into the arms race with Jeff Bezos, who is known for, you know, taking your margin and destroying it and building market share. So when I look at a company like Netflix coming up against Amazon, they've actually got Amazon changing their game. Amazon wanted to sell Amazon Video as part of Prime. That didn't work, and people were like, how do I get Amazon Video? So they had to copy the Netflix model. This is actually a good sign for Netflix that Jeff Bezos is having to follow their strategy. So I'm not worried about that at all. If you're going to hold the stock, you know, you should hold the stock for 5 or 10 years, because we'll be sitting here and looking at 80 million subs and laughing about it, saying, wow, they're at 300 or 400 million. How was this even possible to get 300 or 400 million people to pay for a subscription to something? I'm not talking about reach. I'm talking about paid subscribers.
Sure.
And, you know, it seemed impossible to build an ad network that was global in nature, but Google did it. And that's the same thing. When you take out the friction and you have the data that Reed Hastings has, he can make decisions that studio executives have never been able to make based on looking at that subscriber data and when they quit a program and at what scene they stop watching Daredevil or House of Cards. They know down to who wrote that line of dialogue that killed the series.
So, Jason, let me ask you, and I like your comment about being in the business 5 or 10 years. It's the way that Warren Buffett would say he wants to be in a stock where if he doesn't check the price for 5 or 10 years, or if it doesn't trade, he's still comfortable being in it. But you bring up a point that I just want you to explain a little bit, which is this point about Netflix comparing it as an ad platform to a Facebook or a Google. Part of the appeal of Netflix, you know, to some extent is not having those ads. Are you talking about a two-tiered thing going forward where they start, maybe because people become a little resistant to price hikes, they can say, all right, well, we'll give you a cheaper or even a free option, you know, ad with more, delivering more ads, kind of the two-tiered Hulu approach. Where do you see advertising becoming a bigger part of Netflix's future?
I don't see them doing advertising, actually. What I was making the comparison to is Google was able to build an ad network that transcended just one region and went on a global basis. And, we looked at Google for a period of time and said, oh, my God, the U.S. is slowing down. And they've got so much reach, in terms of search, hitting 90% of the market in the U.S. They claim 85, really probably like 95. So my point there is not that Netflix is going to add advertising, but the same way that ad network grew across borders, Netflix is going to do that for a subscription service direct to consumer, which nobody's ever done that. When you look at an ESPN or an HBO or a Discovery, as great as those businesses are, they always had an intermediary. They always had cable networks that they had to sell their content to, or satellite providers on a global basis. They were in the business of selling to distributors. Netflix is in the business of a direct one-to-one relationship with each consumer, where they're getting their credit card. It is transcendently beautiful as a business. It is going to change everything, and it will be 400 or 500 million subscribers when we come back in 10 years and play this clip.
Well, we'll see how those credit card numbers and the churn and the new pricing affects them, at least for the next few quarters, and their growth there. But meanwhile, we got to move on. Federal prosecutors launching an investigation into whether Theranos misled investors about the state of its technology and its operations. In an interview yesterday on the Today Show, founder Elizabeth Holmes took full responsibility for issues facing the company. The future, though, is still cloudy for Theranos, which had a $9 billion valuation late last year. And Jason, we have been watching this story unfold for months. It's one that's been described as an onion. You peel back the layers and each one makes you cry a little bit more. What's the feedback, though, in the value? How are founders, how are boards regrouping and learning from this situation?
Yeah, this is an embarrassment for Silicon Valley, and it's just a complete and utter train wreck. I believe, my gut tells me, I don't have all the data, that this will be a complete washout. This is going to go to zero. And I think that this is going to be, criminal, and there's going to be a lot of lawsuits for some time to come. When the Wall Street Journal first got their hooks into this story, and really it's Pulitzer-level work by John Carreyrou, who I had on my podcast over there, Elizabeth attacked them. She literally attacked the Wall Street Journal. And now, we're sitting here 6 months later, and they've got her dead to rights. And everybody is coming out, the criminal prosecution, their partners dropping them. And now she's sorry, and now she's on the Today Show. Bizarre. It's bizarre behavior. It's the worst crisis PR I've ever seen in my life. And, it's not a joke. It's one thing to drop out of Harvard and create a social network. It's another thing to drop out of Stanford and not get your, degree in, advanced sciences, and then create a blood testing lab. And they have attacked the Wall Street Journal every time they come up with more data. And this is really dangerous stuff, and it was never a Silicon Valley company. I object to calling it a Silicon Valley company because they did not have Silicon Valley board members. They had, all these kind of generals and, people have nothing to do with technology. They had former secretaries of state, former government officials, and that was one criticism that was lobbed at the company. But what could a board have done in this situation? What should a board have done in this situation? And Jason, let's remember, this is a company that was founded 13 years ago. This is not a freshman-level problem. Yeah, I mean, it's amateur hour in terms of the management. It's amateur hour in terms of the board. And I think it's going to, be a huge fraud. If you look at how we do things in Silicon Valley, you have very, experienced, hardcore venture capitalists who come in and they do due diligence. They bang on the technology. Every venture capitalist who went to them and tried to look at the technology, including Google Ventures, sort of Bill Maris over there, just barbecued them because he was like, I couldn't even see the technology. Our people weren't allowed to see the technology. I know a venture capitalist who had a high-level person who wanted to go work there, and they wouldn't let that person see the technology before they took the job. So this has been a circle the wagons, bizarre mentality with red flag after red flag. And I think that there's going to be some stuff that comes out that's going to be even more salacious and bizarre, especially between Elizabeth and this Sunny Balwani, who is the #2 there. I've been getting pinged by a bunch of people on Twitter about an inappropriate kind of relationship or something going on there. And the Wall Street Journal on my podcast said that they were investigating that. Now, I don't know if any of that's true yet. But there is going to be a crater left by this company, a $9 billion crater, hundreds of millions of dollars in debt, $100 million in lost investment.
Jason,
and who knows
I think it's safe to say you're going to get a lot more pings after just saying that on national television. So we'll leave it there for today, but I know we'll talk to you soon. Jason Calacanis, thanks as always for joining us.